The great modern-day country and western philosopher Kenny Rogers summed it up when he said, "You got to know when to hold them, know when to fold them, know when to walk away, and know when to run." But Kenny's musings don't just apply to gambling. It's pretty smart advice for businesses too. In today's Ask Shaf, I'm going to help you figure out when to buy and when to sell. Let's take a look at what's happening in big business. Online giant Amazon has just invested a whopping amount in food courier company Deliveroo. They've not revealed how much, but are the biggest investors in the company's latest round of fundraising, which reached a cool $450 million. Amazon briefly had its own food delivery business but couldn't take the heat in the kitchen, so have decided to invest instead. They are having an appetizer rather than a 6-course tasting menu at the moment. Time will tell if they go the whole hog and swallow up all of Deliveroo rather than simply investing. But you can bet whatever happens, they have planned their long-term strategy. Every day I see people with no long-term strategy for what and when they want to get out of their business. I get a buzz from analysing a business, buying it, improving it, or turn it into making a profit from a loss and then selling it. Here's another example about knowing when to hold or when to fold. Let's have a look at shares. Start with the basics. To make money in shares is easy. Buy when the price is low, sell when it's high. Yes, I know that's stating the obvious. How do you know when to sell and when to buy? Okay, let's think. How many times have you heard people say they bought at the right time? The price shot up, but they didn't sell and now the price is going back down, so they are waiting for it to go back up again. That makes no sense. The timing was good when the shares were bought, but they didn't sell when the price went up. Why not? Clearly, they were hoping for a bigger jump in price. If it had jumped by 25%, it's unlikely to do so again. If you want to deal in shares, buy them when they're at a low price, and remember to sell them when they've gone up. And on the other side of the coin, if a share price falls, it's for a reason. The market knows something's up, so it'll take its profits or cut its losses. When a share goes down, sell it. If a share goes down from 100 pence to 50, it has collapsed by 50%. In order to go back to 100 pence, it has to rise by 100%. Is that really going to happen? Dealing in shares is like dealing in a business. The point of being an entrepreneur is to buy companies for a low price and sell them for a higher one. The art of being an entrepreneur is to know which ones to buy and when to sell them, or, as our old pal Kenny Rogers would say, it's knowing what to throw away and knowing what to keep. Let me know if you agree with Kenny and me. Like, comment and share, and don't forget to subscribe to my YouTube channel. See you next week for another Ask Shaf.